My name is Eamonn McMahon. As you can see there, I'm the original founder and now a co-founder of Equipment Connect, along with my esteemed colleague Enzo Zadrima, there he is waving, who heads the technology side as the CTO. Today is actually our first time we've pitched the platform to a finance crowd, so please go easy on me, and as Eddie said, hold the questions until after. Right, so very quickly, my background, I worked in the investment banking world for 8 years, started as an analyst, then worked in sales. I was always involved in asset-backed finance. In my more sort of recent years, I got involved in shipping loans and leases, and also on the aviation side. And in addition, I traded some securitizations of equipment leases. Enzo, his background is on the shipping side. He worked at Maersk for 8 years. He headed up a team of technologists, and we came together sort of inspired by what was happening in fintech generally, looking at the success of other platforms, and decided it was time that we launched a platform that connected alternative funders with SMEs who need equipment finance. Sounds sort of very basic and straightforward, but actually, when we look at the market at the moment, there are definitely issues and shortcomings that need to be addressed. So if I just very, very quickly just run through the market. Obviously, we've only got a few minutes, so I'm going to be quick, but it's not niche. Equipment finance is actually, it's over £20 billion in the UK, and that's just equipment finance to SMEs. If you look at the market overall, it's about £45 billion. Over 40% of European SMEs use equipment finance in one shape or form. The structures differ. What you tend to find over in the continent is a lot of finance leasing. In the UK, it's driven very much by hire purchase contracts. We are really focused on delivering technology because we look at two parties. Firstly, we look at the SMEs who need to finance for often their most important assets. At the moment, equipment finance is very, very slow for SMEs. So typically it takes between 3 days and 3 weeks. It can be a little bit faster if the finance is coming from the manufacturer themselves, but often that's not the case. It's quite expensive, and that's really a function of how many intermediaries are involved in the chain. So you can have a leasing company working with a commercial finance broker. The leasing company goes away. They have to get block financing from an asset manager. And ultimately, we see SMEs paying interest rates that are often, high teens into 20s, and that's not really reflective of the risk that's involved, right? Because in equipment finance, a funder will retain title to the equipment if it's a lease, or if it's a secured loan, they'll have a fixed charge on that asset. So we look at it. My ex-clients and current and future funders look at it as a good opportunity, a good risk-adjusted return. Also, the market, it's quite opaque. Moving on then, to the other side, as I mentioned, my ex-clients were, mostly small asset managers, hedge funds, other institutional finance players. They are starved for yield at the moment. A little bit better. The last 2 weeks, we've seen quantitative easing obviously being pulled back. Interest rates are going up, which is helping slightly. But even today, I looked at the high yield index from Bank of America, and it's just over 2.5%, which, let's be honest, isn't high yield. And when inflation is 3%, it's not particularly fair. So it's up to us as entrepreneurs to open up new opportunities. We've seen what's been achieved by some of the bigger platforms focused on bigger areas of lending. Funding Circle, RateSetter, LendInvest, it's a big space. There's over 4 billion now. That's been, it was over £4 billion extended in the UK last year from marketplace lending platforms, and that's growing at about 60% a year. So this next slide is just a very quick snapshot of the platform. This is actually our prototype or demo, so it hasn't had the good fortune of a nice designer sort of working through it. But ultimately, what we're trying to do with the platform is make it as easy as possible for alternative funders to extend finance to SMEs, right? Because the ticket sizes are small. Often, the amount of data that needs to be displayed is considerable. We work very hard to make sure that we have a good grip on the equipment. We work in conjunction with the equipment supplier to understand the depreciation of the asset, what that curve looks like. We get an understanding of the recovery cost and how long it would take to resell a piece of equipment in the event of a default. And all in all, like what we want to do is provide value by ensuring SMEs have access to faster, more affordable, easier equipment finance, and funders have access to an asset class that traditionally has been quite difficult to get involved in. So that's it. Apologies, I ran slightly over. Thank you again for your time, and any questions, just have a chat afterwards. Cheers.